I'm glad to welcome all board members to our meeting today of the Mr. DIY. Thank you for being present in this meeting. Can we call this meeting to order?
Yes.
Are there any apologies for absent in today's meeting?
No, sir. Everyone is full attendance.
No? Let us start our meeting then. Alright, can we proceed to the next item regarding of our project?
Yes, sir.
Yes, sir.
Are there any amendment from our first financial manager? Mr. Abdul Khalid?
Yes, sir. Hello, everyone. My name is Khalid, Financial Manager 1 of Mr. DIY. Nice to meet you all. Today, me and my friends, Khairul, Financial Manager 2, will present the company liquidity, efficiency, and profitability ratios. This ratio will determine our company performance between 2019 to 2020. I will start first with the liquidity and the efficiency ratio of the company. For the liquidity ratio, these ratios measure the firm's ability to pay its short-term obligation as they come due. The higher the ratio, the better the company's performance. For the current ratio in the year of 2019, the company has recorded a higher ratio of 3.41 times, but the ratio has been dropped to 1.74 times in the year of 2020. It shows that the company's ability to pay its short-term obligation on time has become limited through year by year. The quick ratio in the year of 2019 was recorded at 1.18 times in the year of 2020, where the ratio also has been dropped to 0.42 times. It reflects the ability to pay its short-term obligation without relying on inventories has been decreased. The total of net working capital in the year of 2019 is 536,410, which it is been decreasing to 385,088 ringgit in the year of 2020. It shows that the total of net working capital in the recent year keep decreasing, but the company is still liquid and able to pay its short-term obligation. Next, we move to the efficiency ratio. These ratios measure the effectiveness of firm's investment decision and its ability in utilizing the firm's asset to produce sales. The ratio of inventory turnover in the year of 2019 is 4.58 times, which is higher than the ratio of inventory turnover in the year of 2020, where the ratio has been a little bit dropped to 3.71 times. The ratio reflects the effectiveness of the firms in utilizing its inventory to generate. The average collection period that been recorded for the year of 2019 in 19 days, while in the year of 2020 is showing some improvement where it is only take 18 days to complete the average collection period. The ratio indicate that the company did not take more time in collecting the debt. The ratio for the fixed asset turnover from the year of 2019 to the year of 2020 is decreasing from 2.14 times to 1.90 times. The ratio reflects that the company has less effectiveness of fixed asset to generate sales in the recent year. The ratio for the total assets turnover from the year of 2019 to the year of 2020 is also decreasing from 1.25 times to 1.14 times. The lower the ratio of the company reflect the less effectiveness of total assets to generate sales. That's all from me. Thank you.
Are there any other amendment from our second financial manager, Mr. Khairul Ashraf?
Hi everyone, my name is Khairul and I am the Financial Manager 2 of Mr. DIY. It's been a pleasure to meet all of you today. I am responsible to calculate the profitability ratio of the company. So let's begin. So basically there are 5 ratios in the profitability ratio, such as gross profit margin, operating profit margin, net profit margin, return on asset, and lastly return on equity. These ratios measure the profitability of the firm's overall business operations. First, the percentage of gross profit margin from the year of 2019 to the year of 2020 is increasing from 42.35% to 42.65%. It shows that the remaining cash the firm has after paying its trade credit had increased a little bit. Second, the percentage of operation profit margin from the year of 2019 to the year of 2020 is decreasing from 22% to 20.5%. It indicates that the company have bad productivity due to lower percentage through year by year. Next, the percentage of net profit margin from the year of 2019 to the year of 2020 is also decreasing from 13.96% to 13.17%. In these 2 years, the shareholders' income had been decreased due to lower percentage of net profit margin. Next, the percentage of return on asset from the year of 2019 to the year of 2020 is also decreasing from 17.41% to 14.97% due to the lower percentage of return on assets through year by year. The company indicates lower return on firm's investment. Last but not least is the percentage of return on equity from the year of 2019 to the year of 2020 is decreasing sharply from 93.27% to 38.446%. In the year of 2019, the shareholder earned more profits from their investments, which it was recorded at 93.27% for each ringgit Malaysia, but they earn less profits from the investment made in the year of 2020, where the percentage of return on equity was recorded at 38.46% only. That's all from me. Thank you.
Any words from our local bank final institution, Mr. Rushaidi?
Yes, sir. I would like to say that your company's leverage ratio is worse than the industry. This shows that the company is not effective in their financing decision compared to the industry. The debt is decreased 20.24% in 2020, which is from 81.33% in 2019 to 61.09% in 2020. That means the debt of this company is decreased, meanwhile the debt to equity ratio is not the same. This is not good for the company. For this 2-year debt ratio, it is high in ratio reflect, so it is higher in amount of debt to finance assets. And for the debt to equity ratio, it is also high in ratio reflect, so it is high in amount of debt. For the time interest earned, it is low in ratio, indicates that firm cannot meet loan requirement and have high risk of default. So, I think that your company will not be able to get the loan for the upcoming project. I am so sorry, sir.
Okay, let's move on. Anything to say from our shareholder? How about you, Mr. Shahrul Aizat?
Yes, sir. My name is Muhammad Shahrul Aizat, a shareholder of Mr. DIY. It is nice to have all of you here today. So today I will present the company market ratio. The earning per share in the year of 2019 is 370 ringgit and 17 cent, meanwhile 20 ringgit and 3 cent in the year of 2020. Calculated as the reported earnings of the business divided by the total number of shares outstanding. This measurement does not reflect the market price of a company's shares in any way, but can be used by investors to derive the price they think the shares are worth. Per earning ratio in the year of 2019 is not available. Hence, in the year of 2020, the company shows the PE ratio of 0.0799 times. Mr. DIY shown none of the dividend payout ratio for the year of 2019 and 2020 as the data could not be reached, or either way it is not existed, meaning there is no dividend paid.
Anything else to add?
No.
No, sir.
Nice work, everyone. I think the best option is from our first financial manager, Mr. Khalid. Does everyone agrees with me?
Yes, sir.
Okay, I think we can end our meeting today. Any addition?
No.
No, sir.
Okay, anything else? Any question? Any comment? No. Well then. Thank you everyone for coming. Will someone propose this meeting to be adjourned?
Yes, I propose the meeting to be adjourned.
Seconder.
I second the motion.
Thank you. The meeting is adjourned. Have a nice day, everyone.
Thank
you,
you.
sir.